Excuse me. Somebody had to do it. I am the chosen one. Somebody had to do it.
Bitcoin, and what I've pretty much always been, I think it's been quite amazing that for 12 years it's accomplished this, but I think it has no relation to anything. Okay, in other words, it moves, it has no relation. It's a tiny thing that gets a disproportionate attention. You know, the value of Bitcoin is less than a third of the value of Microsoft stock. You could go into industries, biotech and many other industries are more interesting than Bitcoin. It's not going to be an effective money. It's not an effective storeholder wealth. It's not an effective medium of exchange. But we are in a world in which money as we know it is in jeopardy, right? We are printing too much, and it's not just the United States, all the reserve currencies, what's going on in Euroland, what's going on in yen. And so in that world, the question is, what is money and how's that going to operate? So when we look at something like China's renminbi, and then you take the digital renminbi, I think you're going to see that become more and more a thing. So when things start to open up in an evolutionary way, people are going to start to say, where is my safe storeholder wealth? And as you have China denominate more of its trade in renminbi, then naturally those who are going to hold renminbi, if Saudi Arabia sells oil in renminbi and then buys things from China in renminbi, when they get it, they're going to hold more renminbi. It's going to be a higher percentage of their. And so I think the question over the next number of years is really, what is money, not just as a medium of exchange, but a storehold of wealth?
That sounds like a argument for Bitcoin of sorts.
Bitcoin, or for some digital
Bitcoins?
Yeah.
No,
Maybe
I think if you want a digital currency, you have to deal something different. I don't think that the stable coins are good because then you're getting a fiat currency again. I think that what would be best is an inflation-linked coin. Right. In other words, something where basically you would say, okay, this is going to give me buying power, because every individual wants. What do they want? They want to secure their buying power. If you want to save. Now, if you put it in Bitcoin, it goes like this. Who knows what happens? If you put it into something, the closest thing to that is an inflation index bond and so on. But if you created a coin that says, okay, this is buying power that I know I could save in and put my money in over a period of time, and then I can transact in anywhere, I think that would be a good coin. So I think you're going to see probably the development of coins that you haven't seen that probably will end up being attractive, viable coins. I don't think Bitcoin is it.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
Guys, we have Ray Dalio breaking down the U.S. economy and then also the rise of China. Now we see the new world order guys are getting very, very old. And that's the reason why the NWO is stepping it up. Now we know what crypto means. It's hidden message, hidden meaning. And we know Bitcoin is for the robots, algorithms, and drones. But Ray Dalio talked about the yuan, which is going to be the digital yuan, and them being able to trade in their own currency. And we know that's going to happen, guys. They already have their own SWIFT. You know I've done several videos on it. But he gave the example of Saudi Arabia and China trading yuan for oil. And we know that's going to eventually happen. And that's how the Fed is going to pull the rug. Playing the Hegelian dialectic, but we know the NWO funds both sides. But we're watching the rise of the emerging markets along with the BRICS nation. And Ray Dalio says do not fight the Fed. He does not see a pivot later on this year. And I don't see a pivot later on this year either, unless we see the drums are beating. And now we get news that the Pentagon is watching a spy balloon from China. Yes, you heard that correct. No, this is not a movie. But just remember, your life is an illusion and TV is your reality. The NWO is using the same playbook. And remember, the Crypto Teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
Let me ask you a separate question, which is you've talked about China. You just mentioned the renminbi. But when you think about, you also talked about what you think is a potential war, frankly, either economic war or physical war between the U.S. and China, either over Taiwan or other things. Where do you think that sits in this calculus of yours?
Well, we are, there are 5 types of wars. There's a trade war, technology war, geopolitical influence war, capital and economic war, and military war. We're in the first 4 of those wars. And you're at the brink. And when I brink, I don't think we'll go over, but we are right at the brink that you could have an economic war with a form of sanctions that would be, if it happened, really shocking to the economy, world economy, much worse than the Russian war. We know Russian war had implications in a lot of different ways. If you have with China, that would be a problem, and also the issue of Taiwan. I think that you're at a point right now that both sides are so scared of that they're working to set a floor. There's not an improvement in relationships. There's not much prospect of that. But establishing a floor, that's what the last Biden-Xi meeting was about. Right. It's why Tony Blinken's going to go over there. It's like, let's not go below that. And I don't think that we probably will go below that. But you can't be sure. At the same time, I think the economic and competitions and so on are going to be very intense, right?
Can I just ask you a very baseline question, though?
Yeah.
Right now, this market, depending on what you think this market is, it actually believes that inflation's coming down, really coming down.
I think that, yeah.
And they don't believe Jay Powell to some degree.
Well, I don't think they believe. I think what you're referring to is they don't believe what's in the curve. Or in other words, what's in the curve is a significant easing.
Yep. Right.
What Jay Powell is saying is steady.
Right.
Believe steady.
Mm-hmm. You're saying believe steady. You're saying believe what Jay Powell is saying.
Right. I think because it's the nature of a yield curve and the discounting thing, slope of the yield curve, because both markets are trading. So when you have a bond market trading with a short rate, then you can get that curve. It's not necessarily because everybody smartly plots that out. So I don't think you're going to see an easing that is built into the curve. So that means that you're going to see. Look, I'm never sure I'm right, but I think you're not going to see an easing that's equivalent to the building. Believe Jay Powell. There's no good reason. Even if you look at the bond price, let's say bond yields 3.4, 3.5. Let's say you had a 2% inflation. That still means only a 1.4% real rate, which I don't think. So when you look at the bond rate looks like a low rate. Of course, there are big credit spreads on that. But anyway, so I think that you're not going to see the easing. I would say that that's probably one of the easiest, safest bets, that you're not going to see that happen. I don't know. Maybe I'm wrong, but I don't see. I think you're going to see a relatively steady rate. That means that that's not built into the curve. That's a headwind.
So help us try to understand what's happening. We always talk about the economic machine. We've got the Federal Reserve as part of that machine of sorts, at least trying to assess what that machine's going to do. You saw what Jay Powell said yesterday. I think we're all trying to make sense of where we really are.
Okay, well, I mean, these things happen over and over again. We're now in the 12th and a half cycle. You know, these cycles, you know how the cycles work. You're 12 and a half cycles since 1945. 1945 was the New World Order, new monetary system. And you know what happens. So let me take you through it quickly. You get a funky economy, weakness, and so on. So what we had, of course, in 2020 with the combination of COVID, and then also the move from the right to the left. There was a distribution of wealth. And so how did you do that? The government had to send out a bunch of checks.
Yep.
And the Federal Reserve, where did the government get the money from? The Federal Reserve lent it. So we have an imbalance. And, of course, that put a lot of money in the system. You've got the demand, you've got the cycle, classic cycle, right? Stimulation, credit becomes debt, then you have inflation, then you have a tightness of monetary policy. And so where are we? So we now in a classic spot where we've got a relatively high real interest rate. Real interest rates went from minus 175 basis points to plus 175 basis points, right? You've got a cash rate that's relatively high. Cash used to be trashy. Cash is pretty attractive now. You've got an inverted yield curve.
Say that again. You said trash is now more attractive?
Cash
is trash, is what you used to say.
Yes, cash was negative,
right?
1.5%, 2% real rates. Terrible. Now cash is relatively attractive.
Right.
So it's attractive in relation to bonds. It's actually attractive in relation to stocks. You have the classic movement, of course, as rates go up and money becomes tight, you lose the parts of the economy, the parts of the market that are the bubble parts that needed the cash flow, right? So you're seeing it reflected in not only, long duration stocks, those that didn't have cash. So you see the tech stocks come down, all of that come down. You see private equity, you see venture capital because they needed cash. All of that comes down. And then, so you're seeing a very, 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 very classic that we've seen these things for 12, we're halfway through a 12 or 13th cycle, right? But what's also happening in that cycle, since 1945, is that we then have the accumulation of a lot of debt and money. Okay, so we deal with things like the debt ceiling. Does the debt ceiling matter? Does it matter how much debt we have? And then you have a situation where there's used to be a free market supply demand, but now you've got the Federal Reserve who is now taking it, buying it on the balance sheet, so it's not the supply demand. So you've got that dynamic very, very classically growing. I don't think people are paying enough attention to the big cycle. There are these short-term cycles. Since World War II, they've averaged about 6 or 7 years, plus or minus about 3 years. That's what we're in a classic one of those. But we keep building up the debt. And then there are issues in terms of the issue of the dollar and what's happening in terms of the world and the value of money.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.